Bitcoin, the world's first decentralized digital currency, has captivated investors and enthusiasts alike since its inception in 2009. As a peer-to-peer electronic cash system, Bitcoin operates without a central authority, relying on a distributed ledger technology known as blockchain to record and verify transactions. This revolutionary concept has sparked a digital gold rush, with Bitcoin emerging as the leading cryptocurrency by market capitalization. Please like, comment, subscribe, and hit that notification bell so you can see when new material is posted. Please remember, nothing in this video is financial advice. Please do your own research. Bitcoin has a market cap of over $1.3 trillion, which is the highest by far. It is number 1 on the crypto market cap rankings list. Bitcoin has a max supply of 21 million coins and just under 19.7 million circulating supply. That means there are only 1.3 million Bitcoin that can ever be mined or created. Despite these challenges, Bitcoin has gained mainstream recognition as a legitimate asset class. This coin hit its all-time high on March 14, 2024, at $73,737.94. Major financial institutions, including Tesla and Square, have invested billions in Bitcoin, further solidifying its position in the global financial system. Bitcoin's all-time low occurred on July 6, 2013, at $67.81. The cryptocurrency market is renowned for its extreme volatility, and Bitcoin, as the flagship cryptocurrency, is no exception. Bitcoin's price is influenced by a myriad of factors, including supply and demand dynamics, regulatory news, technological advancements, and overall market sentiment. This inherent volatility makes Bitcoin a high-risk, high-reward investment, attracting both seasoned traders and speculative investors. Market sentiment plays a crucial role in driving Bitcoin's price fluctuations. Positive news, such as institutional adoption or favorable regulatory developments, can trigger bullish rallies, sending prices soaring. Conversely, negative news, such as security breaches, government crackdowns, or macroeconomic uncertainty, can spark panic selling, leading to sharp price declines. Bitcoin's limited supply and increasing demand create a delicate balance that further contributes to its volatility. As more investors enter the market, the demand for Bitcoin rises, pushing prices higher. However, with a finite supply, any significant sell-off by large holders, known as whales, can exert downward pressure on prices. May 2024 was a roller coaster for Bitcoin, marked by exhilarating highs and stomach-churning lows. Bitcoin opened in May at $60,250.20. A contrast to its April opening price of over $69,000. If things looked bleak, it quickly got worse. Later that afternoon, Bitcoin dropped to its lowest price in May at $56,803.96. From there, it recovered, and in a few days reached $64,339.83 on May 4th. From there, Bitcoin took a couple of bounces before slightly rising to $65,138.16 on May 6th. After the rise, Bitcoin started moving downward. It was able to maintain a value over $60K. It went as low as $60,380.28 on May 10th. After this drop, it started to slowly move up in price. Bitcoin rose to $63,044.42 on May 13th. From there, it took a fall briefly, then followed the upward trend. It reached $67,246.81 on May 17th. From there, Bitcoin held steady for a day or so, then took off. It reached the monthly peak on May 20th at $71,464.31. Bitcoin held over $70K for a day, then dropped down to $66,941.74 on May 24th. For the rest of the month, Bitcoin bounced between $67,000 and $70,000. It closed out in May at $67,653.23. Though May did not produce better results than April, hopefully June will compete with the highs of March and April. Let's see what happens. How much BTC is needed this month to have $1 million? Let's do the math. At the opening price, you would have needed 16.6 BTC to have $1 million. At the lowest price of $56,803.96, 17.6 BTC will make $1 million. Notice how the sale price can make a huge difference on the amount of gains. At the highest price of the month, only 13.99 BTC was needed to make $1 million. Repercussions and recovery. Picking up the pieces. The early May crash sent shockwaves through the cryptocurrency market, highlighting its inherent volatility and risks. Investors and analysts grappled with the crash's repercussions, planning future strategies. Amidst the turmoil, signs of resilience and recovery emerged. Hodlers remained steadfast, viewing the crash as a buying opportunity. The regulatory landscape, navigating uncertainty. The regulatory landscape for cryptocurrencies, and Bitcoin in particular, has long been characterized by uncertainty and a lack of clarity. This regulatory ambiguity has been a source of both opportunity and concern for the industry. On the one hand, it has allowed for rapid innovation and experimentation, as entrepreneurs and developers have been free to explore the potential of this new technology without the constraints of heavy-handed regulation. On the other hand, the lack of clear regulatory guidelines has also created an environment of uncertainty, making it difficult for businesses to operate and for investors to assess the risks and opportunities of the market. This regulatory gray area has also attracted bad actors, leading to scams, fraud, and market manipulation. In May 2024, the regulatory landscape for Bitcoin remained as complex and uncertain as ever. Governments around the world were grappling with how to regulate this new asset class, balancing the need to protect consumers and prevent illicit activities with the desire to foster innovation and economic growth. The lack of a coordinated global approach to cryptocurrency regulation further added to the uncertainty. Institutional interest, a double-edged sword. Institutional interest in Bitcoin has driven its price appreciation. Major financial institutions have brought capital, liquidity, and legitimacy. This adoption signals Bitcoin's growing maturity. However, it has drawbacks. The market is more susceptible to large players. A single large sell-off can lead to sharp declines. Concerns about market manipulation and insider trading exist. Section 9. The future of Bitcoin, what lies ahead. Interest rates remain high, and the CPI report brings out price fluctuations. However, by analyzing current trends and considering potential future developments, we can make some educated guesses about what lies ahead for Bitcoin. One of the key factors that will shape Bitcoin's future is the regulatory landscape. As governments around the world continue to grapple with how to regulate cryptocurrencies, the outcome of these regulatory debates will have a significant impact on Bitcoin's adoption and price. Clear and favorable regulation could pave the way for wider adoption, while overly restrictive measures could stifle innovation and drive investors away. Another important factor to consider is the pace of technological development. The cryptocurrency space is constantly evolving, with new technologies and applications emerging all the time. Bitcoin will need to continue to innovate and adapt to remain competitive in this rapidly changing landscape. Section 10. Navigating the roller coaster strategies for investors. Investing in Bitcoin can be an exhilarating experience, offering the potential for significant returns. However, it is crucial to remember that Bitcoin is a highly volatile asset, and investing in it carries inherent risks. Before investing in Bitcoin, it is essential to do your research, understand the risks involved, and develop a sound investment strategy. One popular investment strategy is known as dollar-cost averaging. This involves investing a fixed amount of money in Bitcoin at regular intervals, regardless of the price. By investing consistently over time, you can average out the price fluctuations and reduce the impact of volatility on your overall investment. Another strategy is to diversify your portfolio by investing in a basket of cryptocurrencies, rather than putting all your eggs in one basket. This can help to mitigate the risk of any one cryptocurrency performing poorly. Section 11. Conclusion. Bitcoin's unpredictable journey. Bitcoin's journey has been nothing short of remarkable. From its humble beginnings as a fringe experiment to its current status as a multi-billion-dollar asset class, Bitcoin has captured the imagination of investors and enthusiasts alike. Its decentralized nature, limited supply, and potential to disrupt traditional finance have made it both alluring and controversial. As we have seen in May 2024, Bitcoin's price can be highly volatile, subject to wild swings driven by a complex interplay of factors, including market sentiment, regulatory news, technological advancements, and macroeconomic trends. This volatility makes Bitcoin a high-risk, high-reward investment, requiring careful consideration and a sound investment strategy. Please see the links and comments below to follow future price actions and to get more information about this crypto. Let me know if you bought or sold any Bitcoin this month. If you plan to hold or if you hold Bitcoin, leave a #BTC in the comment section. If you enjoyed this video, please hit the like, leave a comment, and hit the notification bell. To see the other videos in this series, select the rectangle in the middle of this page. To see other videos in different series, select the link on the right. As Bitcoin continues to evolve and mature, its impact on the global economy and our daily lives is only just beginning to be felt.